Morning traders, it's the 15th of March. We are Signal Centre Talking Ball. I'm Joe, joined by Steve. How you doing, Steve?
Yeah, very good, thanks, mate. Bit of a cold,
Good.
but I'll battle through.
Okay, sorry to hear that. I'm sure you'll be all
Well,
right.
well, I don't know. You never know nowadays.
No, you don't.
Obviously, let's see if I can stay alive on air.
Yes, let's hope so. Okay, right, plenty to get through today. Again, plenty of headlines and a fairly busy day ahead in terms of economic data. So let's get going. Now, again, if anybody watching, please feel free to post up any markets that you're looking at ahead of all of these major data points today. We'll do our best to give you an opinion on where we think markets may be headed based on a technical perspective. So the latest headlines: financial tensions have eased for now. There was still an important element of caution, but overall financial stresses eased during Tuesday, with relief that there was no further banking casualties at this stage. The US inflation data was the big number out yesterday, and that matched expectations. The consumer prices increased 0.4% for February, which was in line with the consensus forecast, and the year-on-year rate retreated to 6% from 6.4%, which was also in line with expectations. The US and German yields recovered yesterday. Yields dipped briefly at Tuesday's European Open, but there were significant net gains on the day following the drop seen on Monday. The US two-year yield settled around 4.2%. Also, the Fed expectations have settled. There were still concerns surrounding core inflation trends, but expectations that Fed would have to be more cautious given the ongoing financial sector concerns. There was, however, less volatility in the Fed funds futures, with markets setting at around a 70% chance that there'll be an increase of 25 basis points next week, with a 30% chance of no change. The dollar is still struggling. It rallied at times yesterday, but was unable to hold on to those gains, and the dollar index closed marginally lower on the day. And the China data was close to expectations yesterday. The Chinese industrial production and retail sales data was close to expectations, with annual growth of 2.4% and 3.5% respectively. The US retail sales data will be one of the big numbers to watch today. There's important US data releases on Wednesday, with the retail sales and producer prices report, as well as the New York Empire Manufacturing Index, all coming out at the same time today. And thrown into the mix, we've also got the UK budget release. So a few rumours swirling already about what the UK are going to do, looking to obviously ease the cost of living crisis where possible. So that is likely to create some substantial volatility around sterling around lunchtime today. Okay, so that's it for the latest headlines. Steve, if we can take a dive into some of these charts and
Yeah,
as
sure.
usual, kick off with cryptocurrencies.
Yep, no worries. We'll look at the daily chart in Bitcoin because we've broken through quite a serious level. We managed to break up through this 25,400 level. It's a level I have highlighted since 13th of May, in fact, last year. And this has obviously acted. You can see when we eventually broke down through this in June, we had a real strong extension lower. In August, we got back up, retested this area of previous support, and then turned into resistance. And we've done it on a number of occasions since, more closely the middle of Feb. Yesterday, we broke above it. So that's the first time we've been above this level since all the way back in June last year. However, we did reverse rather sharply after poking our head above the parapet and formed a shooting star candle. That's definitely a candle of concern for the bulls. However, it would be more of a concern if we get a big sell-off today, because that would form a evening star formation. So let's see how today plays out. We might have a little bit more idea of whether this is going to just be a flash in the pan, or there's a more serious mode to the uptrend. 25,000 we're trading at the moment, and yeah, not looking too bad on the short-term charts. Let's look at the 4-hour chart. We can see yesterday the big spike up, but then the reversal right back down again. Looked pretty horrendous at one point, but we've managed to hold on. Level to watch on the downside: if we do get a break below the 23,900 level, then I would say that evening star formation is more likely to confirm. So yeah, watch that today. Support all the way down, really. The major support down around about 22,500 level. So did we manage to get up above the 1730 level in Ethereum? Yes, we did. We got up to 1784 again. If we go back on, let's go on the daily chart, it's a little bit easier to show when the last time we were up at those levels. We can see this is going to be, we stalled at a previous swing high, which is 1789, just in front of that. And again, that shooting star candle on the daily chart is not a great candle to see if you're a bull in Ethereum. However, we are holding around those 1730 levels, trading 1710 at the moment. So a little bit more potential for the upside. But if we do manage to get a break at some point today of 1665, then look out. Another evening star formation could be forming on a daily chart, which is a really good reversal formation. XRP hasn't really done anything. It's sort of, it's just like really focused on the SEC lawsuit. We're still waiting on a resolve from there, and could be waiting a long while, obviously. And yeah, we're just tracking sideways. So is there a little bit of potential upside for XRP? It's just not reacting the way it would normally do. It does seem to be a master of its own destiny, really, compared to the other cryptocurrencies. So resistance remains for me around about 43 cents. Support, quite key support down at 35.50. Below that, we've got the 30-cent level. But overall, I still remain bearish on the medium long-term outlook on cryptos. So that's not going to change unless we get some really, really decent rallies from current levels. Taking a look at commodities, diving into there. We did get a stall yesterday on gold. I did this on my gun to head. I made a small profit, nothing really to shout about, but it was a profit anyway. But yeah, so overall, we're sort of the reversal has sort of started to continue today. So really, shame we have to close them trades at 9 o'clock. If we were allowed to keep them open, I'd be well on the way to sort of like nailing a decent profit in there. And yeah, just into support now on the daily chart in the form of the Ichimoku cloud, but the major support level all the way down at 1805. In the meantime, I would expect to see some sort of stalling on the downside around about the 1870 level. 1890 trading now. We got up to 1915, just short of that, and the reversal is looks to be entrenched now, and we've had a couple of negative days. So just that sort of like paring back from those gains. Overall, gold still sort of like quite mildly positive towards it, and yeah, just looking for these levels to sort of like see if we get any real opportunities. But for me, I like to sell at the sort of resistance levels, which is 1915. We're trading well below at the moment, so no real opportunity there from an intraday time perspective at the moment, unless you're short and you're just riding it, and then brilliant. Silver stalled, also bit of a doji-like candle yesterday. We haven't managed to break down below the lows on silver. That was 21.50 yesterday, so maybe a little bit of an opportunity there. Silver takes a little while to catch up with gold on some occasions. Resistance coming in around about the $22 level, and support really a break of the 21.50, and that should open up further downside opportunity, potentially to the $21 level. Taking a look at crude oil, we've broken down. This seems to be sort of getting a little bit battered at the moment. The support level that we stalled at yesterday and reacted higher from, 72.58, has been taken out, and we have closed below it on a daily basis. So that's pretty decent. We've retested it this morning. As you can see, this little green candle revving up for the day ahead. And we are Wednesday. We've got all inventories out later, and that could add some spicy volatility to it. So let's watch out for there. The next level of support for me is at 70.21 in WTI crude oil. That was the swing low from early December. A break below there, and it really does open up the downside, potentially to the $62 level. So yeah, one to watch today, definitely. That may be an ideal gun to head trade idea, especially after we've retested that break of support. So there's that support now turned into solid resistance. We'll see. The Brent crude oil has had a similar sort of price action, and we have broken through the 77.60 support. However, we are back above it at the moment, trading at 77.90. So really sort of like trying to hold on to the levels we're trading at the moment. The major level of support, 75.26, that's the one to watch. A break below there, and again, similar to a WTI crude oil, opens up a potential for a $10 move to the downside. So one to watch today on such a busy day. And finally, natural gas on the commodity side of things. We had a decent day Monday, stalled yesterday, so starting to pare back on the hopeful spike we had on Monday, and seems to be sort of like firmly entrenched in this negative downward spiral. So as we've talked about before, I think we had a measured move target for the overall head and shoulders formation all the way down at 135. So that's still on the cards. 210 is the major support, 305 the major resistance on natural gas.
Nice one, Steve. Thank you very much. Just get into the FX markets now. Okay, so let's look at those. Starting off with the dollar index as usual. Let's bring up the banner. So we're going to be talking about dollar index. Right, daily chart. Let's have a look. Okay, so we know we broke out of this wedge to the downside, and we've seen three consecutive negative days. But yesterday we posted a bit of a doji candle, so we can see they're pretty much prices closed where they opened. But we've got this support here in black at 103.62. We've actually made a marginal new low on the day, but now pushing back above that support level. So indication that there is a bit of buying action going on here. And potentially pushing prices to the upside. Could only be a corrective move, but it does look as though this line at 103.62 is providing some level of support in the short term. Obviously, if we get a close below that, then we could trigger further losses to the downside towards 102.15. For now, that support's holding, so maybe we'll see some relief on the dollar index today following this bit of a sell-off that we've seen. Okay, a few requests coming in, so I will get to all of those. One of the interesting requests that came in from Lompra on TradingView, talking about Euro US dollar and Sterling US dollar, and noting that there are a couple of gaps on the charts here. So this is Euro US dollar. So this is broken out of a wedge to the upside following that gap high that we saw on Monday. Price is stalling over the last couple of sessions, not really making any further headway. But we do have a lot of data due out today, so there could be some excess volatility in these markets. Given that we've seen the break of this wedge on the daily chart, this would indicate that prices could head higher towards 108.85, but we do have support created by that gap at 106.39. If we take a look at this on the intraday charts, just to really highlight where this gap is, we can see that this is the gap here, Friday's close, which was at 106.39, which is what we've got highlighted here on the chart. And we've also got a short-term 50% Fibonacci retracement level, providing this is the short-term top. We can see that yellow line also pretty much marries up with that gap. So a pullback to that kind of level there, I think would be an interesting opportunity to potentially buy, given that we've seen that bullish price action on the daily chart and the break of the wedge. So any pullback to that level, maybe look a bit unrealistic today, but you never know. It could be a pretty volatile day. But I think maybe having some resting orders at that gap wouldn't be a terrible strategy or a terrible play or a way of looking to get some exposure to Euro US dollar. Similar situation on cable. We can see again that we've seen this break of the wedge. This was a little bit concerning prior to that break because we did appear to complete a double top on that breakdown there on Tuesday, the 7th of March, but it was reversed very quickly, eventually breaking out of this wedge formation and again creating a gap on the chart. Last couple of days, been a little bit of a pullback, nothing too drastic, but from a technical perspective, a pullback to that newly formed support at 120.32 or 120.30 would represent probably a good opportunity to buy. Given that we've seen the break of this wedge. So it'll be a nice pullback into that level. Again, focusing on the intraday charts, we can see here that we also have a 50% fib level around 120.02. So a little bit over or below that gap that we've got created there from Friday to Monday's open. We've also got the volume point of control over the last 20 sessions. So this indicates where most trade or where the price has traded at the most in that period, and it pretty much is bang in line with that gap. So you've got a couple of areas of support there and reasons to potentially target an entry there on the long side in a pullback into that gap. So quite a nice spot there by Lompra, and yeah, gaps are a good thing to look at in the markets because they can often provide support, and we do often get retests of those levels when they occur. Okay, a few other requests. Aussie Yen was requested by Ali on YouTube, so let's take a quick look at that. So we can see here on the daily chart, first of all, it looks as though price action had formed a large head and shoulders top. Then we saw a breakdown from that level, didn't quite get to the measured move of the head and shoulders top, and then we saw a pretty sizable rally, although it was pretty choppy within this period, that's taken place over the last few weeks or so. Now, the rally has stalled at the 50% fib level, from the right shoulder down to the lows that we made in December, and prices stalled into this region here, as we can see. Then prices moved to the downside, breaking out of this corrective channel to the downside. That occurred on Thursday last week. Then prices eventually extended lower to around 87.80 before staging a bit of a rally in the last few sessions. So now what we're seeing is a retest of the reverse side of this broken channel. So could there be some resistance here? Could this be potentially an opportunity to sell into this retest, looking at it on a daily basis? Very much so, I think. If we take a look at the intraday charts, just to have a look at how things are shaping up here, taking that sort of latest move lower, we've got a 50% fib line coming in at 90.45. The volume point of control in this shorter term period is up here at the 78.6% fib level. So maybe it could overshoot into those kind of levels there. But we do have some resistance at 90.25. If you're feeling brave, then maybe you could take a look at a sell trade there. Maybe you'd want to wait and see if there's any sort of confirmation that we get any kind of candles that burst through these levels and then reverse to provide a bit of a swing failure. That could be your cue to get on board there. But overall, I'd say based on the daily chart, this looks quite bearish, and I'd be tempted, I think, to sell into this rally. Should have a quick look and see if there's a fib level here. If it's hopefully the same one, yeah, it is. So 50% is at 90.40. Okay, so look at dollar yen while we're on the yen currencies. So this is the daily, bit of a messy one at the minute. So was trading in a very neat bearish channel for a period of time. Then we saw these breakouts here. So we saw the wedge at the bottom of the channel, which broke out, prices pushed higher before eventually reaching a 38.2% fib level and then breaking down. Another tight wedge here, which prices have broken down from, suggesting that lower prices may be seen. So as we know, dollar's been on a bit of a rough ride at the minute due to what's happening with the Fed funds futures and the threat of the interest rates not being raised as high as we previously thought. 70% chance now of a 25 basis point hike, 30% chance of no hike whatsoever. So it has been pretty choppy indeed. So where's price headed from here? Well, given that we've seen the break of the wedge, maybe we'll see some sort of retest of the wedge at some point, maybe into this kind of region here, 135.93. If that caps the upside, if we start to see some wicks of candles trying to burst through but not able to close above that level, then that could indicate that we may see lower prices and a push towards the downside. So dollar looking a little bit under pressure at the moment, but as we mentioned on the dollar index chart, and let's just go back to that again, we know that there is support here at the moment at 103.62. So if the dollar interest, if dollar interests start to increase and we start to see more bullish price action here, then that would suggest that actually dollar yen could continue to move higher in the short term, but who knows how far. Okay, dollar CAD, let's take a look at that. So this has been pretty choppy. This is the daily chart. We can see here prices pretty range bound. We saw a decent push to the upside into these big bands of resistance between 138.37 to 138.55. Prices stalled at that level, and we've seen a pullback into this newly formed support zone between 136.82 to 137.00. Prices holding there at the minute. So arguably we've got a bit of a range breakout here, and we've seen a nice pullback to test that newly formed support. And so far, that's doing a pretty good job. So if prices continue to hold here, and don't forget we've got support on the dollar index chart. So if that continues to hold, then that obviously will be bullish for this particular pair, and we could see another move higher towards that 138.37 level. So maybe on the short term here, there are some potential ranges that we can maybe look to take advantage of. something around those kind of levels there. Let's get rid of this for the time being, and targeting a move to the upper end of the range. I mean, the upper end of the range, the levels go way back actually on the chart. But from a short-term perspective, maybe you could look to play that on the upside here. And from a risk reward perspective, if you're buying with a stop below these recent lows, targeting a move to the upper end, or actually we can see a big gap there, which was created on Friday. Into that gap, you're looking at about 2.64 to 1 as a risk reward ratio, which isn't too terrible, to be totally honest. So do we have a short-term downtrend here as well that we can look at? Yep. 3 touch points there, which signify a trend. It looks as though we're attempting to break through that now, so that could be the confirmation you're looking for in order to try and ride this higher into that gap there. So it looks quite nice, actually. Maybe a gun to the head candidate. Okay, let's take a look finally at New Zealand dollar, US dollar. Let's go to the dailies again. So we can see here prices have been range bound between 81.03 to around 84.98. We did try and break out through this level on Wednesday last week before reversing sharply. Seems to have been some support found around this last key low from February the 10th. We can see we posted this doji type candle here, having made a move below that level and closing above it, and then that triggered further gains yesterday. And again, we're on the front foot today. I've got resistance between 84.86 to 84.98. So maybe expecting upside to be limited into that sort of region there. So from a risk reward perspective, trying to buy that now, while it's kind of in the middle of this range, targeting a move to the upper end could pay off, but where would you put your stop would be the main concern there. I mean, ideally you'd want it to be below a previous swing low, and at that point the risk reward isn't particularly favorable. So maybe the risk reward improves a bit into that resistance area there. We can have a stop above the recent high and potentially target a move back down to the lower end of this short-term range that's established. So the risk reward at that point is around about 4.25 to 1, which would be a lot more favorable for me. I think that's pretty much it on the requests for currencies, and hopefully giving us a sort of decent overview of a few of them. I'll hand it over to Steve now. You can run us through some indices.
Thanks, Joe. Yeah, let's take a look at FTSE to start with. We had a bit of a recovery yesterday in FTSE. Obviously, the sort of like the banking sector taking a huge hit over the last few days, and a little bit of sort of like tranquility came into the markets, and prices moved higher, made a low around about the 7,500 level. Now that will be a major support to look at for FTSE now, from now moving forward. Today we've had a little bit of a pullback overnight, but still potentially a further upside. I've been going through the indices as Joe was speaking, and really at sort of like key decision levels, more on a shorter term basis. So decent market, decent recovery yesterday. Can it continue today? Looking at the 4-hour chart, we've now got quite a nice level of resistance to 4-hour candles, which have stalled around about the 76.44 level. However, price action now engulfing most of that price action. So if we do manage to get below the 75.83 level, then I think this bounce has just been a bit of a dead cat bounce. So not a sustainable one in real language. Let's take a look at the Germany 40, the DAX. Again, stalled at 14,887, stalled around there, went sideways for a while, and then confidence was regained and we pushed higher and topped out. Again, look at these levels, 15,272. And we also, in between there, we found support at 15,125. That's the level to watch on the downside from an intraday perspective. Look out for that. If that does hold, then happy days. We could look for this extension higher. However, if you look at the overall Elliott wave theory behind everything, this looks like a fifth and final wave is complete, and we're in an ABC correction. So that signifies potentially we're primed for a move lower to have that further extension. I think it's all about timing for these, because this morning obviously, or towards the end of yesterday and overnight, it felt like we're having a bit of a bounce back, but it seems to have stalled, and the more focus on the downside. But it feels like a bit of a flip of a coin. So for a gun to head perspective, there's two sort of opportunities, but there's slightly different time frames, and you just got to get that risk reward and the trade management right on these. EU50, we've got the resistance coming in at 41.90 and support coming in at 41.45 on an intraday basis. And again, looking for that, have we possibly completed that B leg in the ABC correction, ready for the next sell-off? Looking at the 4-hour chart on the US indices is a little bit more positive, I would say. We've sort of like got these like head and shoulders formations that have formed. I'll draw them on here. Oh, that one wasn't drawn correctly. Just get it up there. So looks like they're potential inverse head and shoulders formations. Really need to see a break of the 32,380 on the Dow, the US 30. Support coming in at 31,500. The key levels to watch over the coming days. NASDAQ seems to have sort of like also had the same sort of price action. It looks like we're below a potential neckline. It's not a great inverse head and shoulders to draw because we haven't really had a major sell-off into it. It's only sort of like come from 12,450. But yeah, sitting above the 4-hour Ichimoku cloud and primed to sort of like have a go maybe on the upside. S&P, let me just give you the levels on there. Yeah, resistance coming in at current levels, 12,228. Support really, I would say 12,050. Major support coming in at 11,680. And S&P again, is there a potential inverse head and shoulders formation? Looks a little bit neater on this chart. Let's just draw it on there so you know what I'm talking about. Here's the left shoulder, neckline, head, neckline, right shoulder, and bang. Obviously only a potential formation. It needs to break and close above that neckline, 39.38, 39.40, should we call it? So doesn't feel like the right time to be giving a gun to head trade idea. I'd much rather wait until later, but that's not the option we have. We have to come up with a trade idea. But that's about it on the indices. Just primed, ready for the next big move.
Yeah, lovely. Okay, let's move on to the gun to the head trades then. So this is where Steve and I pick trade ideas on the video. We've referred to them already on the stream today. We pick these ideas every day, and we've got a live account that we're running. So just we start off with £2,000 at the start of 2023. Each of the ideas we come up with must have stops and targets and risk reward ratios that are better than 2 to 1. We close these ideas out at 9 p.m. UK time or when the stops or the targets are hit. And each time that we do these trades, we risk 1% of trading capital. So we had 2 trade ideas yesterday. I was involved in the FX market, so I was looking at euro sterling. So I was buying this yesterday and worked out reasonably well. I was about half an hour on side, 0.47 hour on side. It still looks pretty good, and though it could continue higher towards that target. So I was closed out at 9 o'clock, of course, so 0.47R was secured. And Steve was looking at gold. He was looking for a potential double top on gold. If we click the play button there, we can see also his previous day's trade, which was a winner. We can see that Steve was also very slightly on side at 9 o'clock, 0.08R on side. A win is a win. That's 4 in a row for Steve. So we'll all be hanging on every word today. But that looks to be working out quite nicely as well.
It's trading at 1887 at the moment, so it's like halfway down to the target at the moment.
Oh, blimey. All the way down there because it's based on an hourly candle.
Yeah.
Okay. Well, fantastic. Good pick, Steve.
Yeah, quite pleased with that. On a bit of a run at the moment. What could go wrong?
Yeah,
Surely
don't get
nothing.
too complacent.
No.
Right, trade ideas today. I've got one ready if you want me to go
first.
Yeah,
please, because I'm struggling.
Okay, I'm actually diving into indices, which I haven't done for a while.
Oh, here we go. Oh my God, what you
so
did do.
I'm stepping into Steve's area, his domain.
Well, not my area of expertise for sure after a few of the trade ideas I've posted.
Okay, well, this is Euro Stocks 50 because there's not many indices that we can actually get away with trading with such a small account. So that's something, traders do need to keep in mind. So this is Euro Stocks 50. Looks as though it's formed a bit of a top pattern here, broken down through the support at 41.71 on this big impulsive move low that we saw on Monday. Seen a nice rounded retest of this level, which is also a 38.2% fib level. Looks to be stalling. So I want to sell that. With a stop loss at 41.86, if you may, Steve.
Yeah.
And target and move down to these lows at 40.70. So for me, that looks quite interesting. Let's just take a quick look at the daily just to see how things are shaping up there. So obviously in corrective mode, as we know. Bit of a rounded top here, which is what we're discussing on the intraday charts, and prices looking to start heading lower. So a number of key lows in here, which we've retested, and hoping that will act as resistance, and looking to target these lows actually that were posted on Monday, but potentially could even target lower prices down to 40.20, which looks to be maybe the neckline of this larger bottom pattern that seems to have formed. So just looking for a short-term trade on the downside there. Also actually noticed on the 4-hour chart, it was a nice Elliott wave count going on, which I think Steve already mentioned. So there's a 5-way count here, and in the process of completing an ABC correction. So potentially this is the B leg, which indicates that we might see a C leg completion, which is potentially these levels down here. So yeah, plenty to play for there by the looks of things.
Yeah, I like that, mate. That's on your short at 41 55.2. Stop at 41.86, targeting 40.70.
Lovely. Thank you very much, Steve. Over to you.
Well, you sort of like took that opportunity away from me, but I'm quite pleased you did because I'm still a little bit unsure on that at the moment. But what do I do? Shall I step on Joe's toes and go into? Yeah, why not? Yeah. Let me flick through the hourly charts on here, see if I'm seeing anything cable.
Dollar CAD one looked quite interesting. I thought that was my sort of secondary option. It depends if you're bullish on dollar or not, though, I suppose. It is at support, so it's
Yeah,
maybe a bit of...
quite a nice one. Let's go for that, Joe. Why not? You can see we've sort of like stalled in front of support, posted a higher low, and just broken above that sort of like neckline. So a potential double bottom formation.
break of a short-term downtrend as well. If you go from the high on the Friday the 10th of March, so the next one down, yeah, that could work as well.
Right.
Yeah, that works. You get multiple touch points here. Does the same job.
Yeah. Why not? Okay, let's. I can always blame Joe with this. I'll just say.
Yeah, I was going to say. I've just stepped in and nicked your trade, basically. Done both of the ones I wanted to do.
Yeah. Well, when I'm a bit unsure, maybe that's not a bad policy to follow. Let's try and get a sort of like some sort of fib to target on the upside. How about that? 137. 80. Target that on the upside. 136.50. Why is that in red? Because that's 137.81. There we go. That's a bit better. That's not really going to work though. 137.50. Stop. 137.80. We're getting long at here, but it's only 1.45 to 1. So I need to target a little bit higher.
Not on your chart, but on the one I'm looking at, there's one at 138.22.
Oh, I just put in 20 there. I'll leave it at 20 just in case. Yeah. 2.23 to 1. That's my long time average of target. So I'll go with that.
Happy days.
We're in.
Cool.
Already. So we're going for it, Joe. We're going long dollar CAD, so long the dollar, short CAD, and obviously
short
we've got
Euro stocks.
Oil inventories out today and short Euro stocks.
Yeah, so it's all happening.
Yeah, could be a good day, Joe.
Could be. That's positive, shall we?
Yeah.
Okay, let's run through that data today then. So much out today. 12:30 got the UK budget release. At the same time, we've got US producer prices, US retail sales, and US New York Empire survey. So a big cluster of information going to come out at 12:30. Obviously, the US data points are coming out an hour earlier than they usually do because the clocks have changed there. 2:30 UK time, this is usually 3:30, we've got the EIA oil inventory report. So that is going to impact some of these commodity currencies like dollar CAD, typically highly sensitive to oil price movement. So we'll be watching on that number as well. Overnight, we've got Australian labour market reports. That's at midnight UK time. And then tomorrow, we've got some central bank policies coming out from the ECB, and they're expected to raise interest rates by 50 basis points. So we'll do more of a preview on that tomorrow. And hopefully we have a good day on our trades today, Steve.
Yeah, be nice. All right, mate.
Cool. All right. Well, have a great day, everybody. Thank you for getting involved, posting up your requests. Hopefully our insights have helped. And we'll be back tomorrow morning.
Cheers.
Cheers, Em.